Yep. How's everyone doing today? Sorry, let me go back. All right. I'm doing well, Maddie. Thank you. So today we're doing normal tape reading for the week. Obviously, been kind of a slow week on my end. I took a trade on Tuesday. And that was really about it. No major trades after that or before that. But took a session, try to get session high to session low, ended up being session high to like midway through, or not midway through, but like 75% of the way through. That trade and recap is already posted up if you missed it into the YouTube vid section from the 22nd. So this is the actual real tape reading session we're doing of the week. I already sent out the daily bias. If you haven't read that already, that's kind of what I'm looking for briefly. Relative equal highs all up through here on the 1 hour chart. If you just take a look over here. I don't think it's not too hard to see a bullish bias, at least for now. I do want to mention, though, that coming into this week, with the fact that we had unemployment claims on Thursday and no other outlying red folder news drivers, the weekly outlook that we had at the beginning of this week, I mentioned the likelihood of a seek and destroy / consolidation reversal profile for the week. All right, and as you can see, in here we're seeing multiple run-on stops on both directions, right? Buy side first, then sell side, and then sell side again, and then back up to buy side in here, and now we're seeing another sell side run internally back into the buy side. So we're staying obviously within this tight range of the weekly range. So that's why when normally we see this, you typically see some sort of Thursday reversal, either like this, and you run the smooth highs there, or a little bit different, something like that. But a lot of times you see a Thursday kind of swing point made inside of the market. Now on the 4 hour chart, I think it's a little bit easier to see some bullish price action, but I'm more concerned with the fact that it may run this high and then immediately purge that and then revert back into the range. That's what I'm watching for today. So the opening range, the first 30 minutes, I'm bullish for now. I'm watching that 5-minute order flow. I mentioned I'm using it as a crutch today because that's going to be the main thing that is going to get me into a trade, is watching this 5-minute till it cleans up. And then, yeah, hunting these highs unless it tells me otherwise, staying flexible, and then preferably looking for an entry prior to the end of the 950 macro. So anytime between 9:30 and 10:10 is kind of where I'm focusing on today. I think my allergies are kicking in, so if I clear my nose, I apologize. Let me close my window, actually. I mean, it's just the bipolar weather. Still no first presentation fair value gap, so I'm watching this, but I mean, kind of reading what we're seeing coming into the session here. We've got kind of just this consolidation range, and I see that both the London high and London low are being ran out, right? And there's not really a clean week daily profile that you can see come into this price action. It's already a sign, but if when you see that, and you can't really, you shouldn't be patterning it in the first place, but when it looks visually difficult compared to something like a very classic profile, which we don't really see any of that this week, you have to rely on your 1-hour chart or higher. 1 hour, 4 hour, things like that to give you a little bit of a better bias, which was the bias that we had on Tuesday, right? It was using the 4 hour and then the 1 hour and then the 15. That top down analysis is always going to be universal in every single price action read for a bias. So the more you get familiar with that, instead of, relying on lower time frame price action in very good seasons like fall and spring, you probably can just hop onto the 15-minute and just get a bias that way, just because of how clean the price action is. When seasons like this, where it's in a consolidation period or just inherently harder, you have to do a very diligent method of finding your bias, right? Going fully through top down, arguing both sides, and instead of just, there's some days in the spring where I'm able to just pull it up, look at it for about 2 minutes and just determine a bias. Most times in here, I gotta sit and look at it for a little bit longer than that to come to at least a soft conclusion of where I think price will go to. We do have SMT at the swing high. I'm aware of that at the current weekly high. ES looks a little bit too strong for me to say that it was going to outright reverse. And we do have not really a lot of gaps in here, so I'm watching that. We do have the order block as well on the 15-minute chart back in discount. So, and if there's no trade today, there's no trade. I'm not trying to force anything. Got a tiny inefficiency here. Yeah. Bearish order block in here. I'm trying to determine what profiles to be anyways. Swing high up here, 730, so I'm watching this. Because profile-wise, both this swing high and this swing lower within the time window we would like to see. Now, on the 5-minute, 15-minute, a little bit harder to frame a bullish bias unless we close back this candle above this gap here. So I'm watching. And yeah, really not, still really no displacement on the 1 minute, and the 5-minute is still a little back and forth for me. I need to look for downside targets. Yeah, still pretty far. So right now, price action is holding 1 minute bearish order block. Yeah, when you look at this in the 5 and the 15, it looks very very weird for it to read. I mean, I would have liked if we closed above this and just aggressively ran up at 930 for that swing high. Just gonna stay very flexible and watching it for now. But got a nice closure through that swing low, so to me this becomes the immediate target for now. Current daily low. Inefficiency, very tiny inefficiency with the 1 minute order block. Both combination holding price action. So it's showing you, tipping its hand a little bit on the 1 minute scale of order flow. We're still only about 11 minutes into the session, so I'd like for opening range to clear up a little bit and then see if I can take one during the macro time. But I'm relying heavily on this 5 minute chart today to give me a bit of a clearer direction. So until I see a nice 5 minute healthy candle, and it really just starts to clean up. See this wick on both sides. You got this drop back down. So 5 minute order flow right now in short term is bearish, but yeah, 8:30 midnight, right? Yeah, so I'm not trying to push anything. The Tuesday trade that I had taken was already my entire weekly goal. So I'm not needing to take a trade, I guess, on Thursday, Friday, even if it's not there. Sometimes, with these kind of profiles, you have to sit out till Thursday, Friday, and then if you, not saying to trade your P&L or anything, but if you wanted to take a setup, that would be the days you focus on, as I've kind of shown with this week. That's the main focus relies on those days, because on a consolidation reversal profile, you have those internal run-on stops over and over until Thursday happens. Typically, when you have that swing point in the market, either on a 4-hour liquidity pool or a 4-hour gap, that's where you see this continuation going into Friday typically. So Thursday creates a swing point, continues into the PM session, and then Friday kind of continues that range into London close. That's the back end of that profile you want to be trading, which is, it's very hard to see it, and really the only way you can spot it going into it is if we're constantly on the 1-hour chart taking stops back, both sides, back and forth. Kind of what you saw last week in here, in a sense. Not really too much, but maybe it's this one. I don't know. This one in here. This is the consolidation reversal profile that we had, right? 2 weeks ago. Taking both stops, sell side, buy side, coming up. This is a lot worse because there's no inefficiencies being placed in, as you can see, compared to this one, which is a little more volatile, up, down. But you can still see it's kind of evident of a consolidation range. So we're still within this 1-hour gap. I was mentioning this inefficiency here. If we can close a 15-minute candle above this, still looking good. What is settlement when it's referred to as a timed open? It depends on what you mean. If you're talking the standard dictionary terminology, it would be the closing price. If you want the bank definition, it's right around the closing price. And it depends on what asset class as well. But yeah, it would be the closing price. The banks use a little bit differently. It's not too important that you know the difference, but yeah, settlement would be the closing price basically of the day, and that's what you could use. So we're using this that tiny gap, the blue box there, as almost inversion fair value gap. You see it being wicked into on the way down, then closed through, and then wicked into here. So wicked, closed through, wicked into again, and now we're getting a change to say delivery, preferably. If we can close that. 15-minute chart. Close it. It's not the best. It's not what I wanted to see. Yeah, see all this relative equal high is still being left open, this being left open, and then the current weekly high being left open. To me, it's just generating and building all that buy side. So if actually it can trade back into this, form a gap there, I may take that as my long opportunity. Be below the 930 opening price as well. I want it right on the SysD though. I'm waiting for this candle to close. I don't want to be filled prior to it, so I'm keeping my finger over the X in case. There you go. So for value gap with the inefficiency in here and the change state delivery, we'll put this in predictions chat really quickly. So looking for the SysD and FEG only. And the stop in this case is going underneath consequent encroachment and underneath the entire breaker there. So you can see the 5 minutes still holding a little bit. You got a 5 minute. Oh, sorry, this is 15-minute. 5 minute there. Running the stops, candle bodies closing above, and then energetically running up through here. So getting nice changes say delivery on the 5 minute. Doesn't look like I'm going to get filled with this one. So if we do form a gap on top of this changes say delivery, I'll take that as well. So you can see there's kind of these fractal breakers that are being put in place, right? You got this low, high, lower, low. Doesn't run out the higher time frame PD array, but I assume there's SMT down there, either between ES or YM. Yeah, you got 930 SMT between these lows. So it's not 100% required. We're still digging within this 1 hour gap anyways. So low, high, lower, low, change of state delivery, gap. That's a unicorn. Could use. And then you also have this low, high, lower, low in here. That's a fractal breaker, right? This one is nested within this one. So on a higher time frame or on a higher time frame, you can see it up here, right? Changes state delivery, but also on the 1 minute chart, you also have this change in state delivery. So if you can form a gap in here, I'm tempted to take that as my entry instead of this one because I don't believe this one would be filled anymore if this is within a balanced price range. So I'm waiting to see if we can get a gap closure, and this one can close right above that candle body high. Not too bad. So I put on consequent encroachment there just to see when it comes down and fill that. So in this case, if it does just briefly tag this and leave, then I mean I get filled. Or trying to decide if I want it on the top end or not. It doesn't look like, yeah, this is all inefficient, so it should come back down. A 2 minute gap. Beautiful. So inefficiency in here. Fair value gap. We got the first presentation in here. Ooh, I gotta be careful now. Still pretty reasonable though. Tag me. There you go. All right, let's see. So Phil there was on consequent encroachment of the 2-minute fair value gap. Stop right now is below the first presentation. I actually could trim it to here. So let's save it, trim it to there, to be honest. Underneath the first presentation gap, just in case if it want to comes back and fill that, I can see it doing that, but I prefer if it's left open as a breakaway gap. I'll screenshot this really quickly. This is a demo trade. Do not copy this. This is for my own learning purposes and teaching purposes. This is not a trade that I want anyone to copy. I got to say that every time. Looking for higher prices going into silver bullet. Don't need it to dig too far. Let's see if I can get a pyramid in here as well. But coming down, you can see it's touching this bullish order block on the 15-second chart. Coming back to this last efficient area of price action. Preferably, in the best case scenario, at this point, it's completely bounced this entire down leg. So as it starts to leave, if it gives me a gap up, I'll take that 1 minute or 15-second inefficiency back into the range and then look for the highs. And stop at this point is in a very safe spot. Not very aggressive on this. Conservative stop placements, I'm sacrificing, yeah, maybe some risk to reward ratio, but it's in a conservative area that I believe to be an area of invalidation. That's the most important part, right? Stop placements need to be in a spot of invalidation for the trade and not in a fixed limit order or fixed price or fixed whatever, in my opinion, because otherwise you can't trust the stop loss as much, right? If it's in a logical invalidation spot, when it crosses that stop loss, even by a tick, you can trust it to do its job properly. And you say, okay, that's a trade I don't want to be in anymore. Problem is if you keep like a fixed stop loss, like a 10-point stop loss every time, or I always put it here, for example, it's not always going to be a point of invalidation for every trade. And that's going to be times where you get stopped out and you still think it's a valid trade. And that may cause psychological mistakes or even just pain that you don't otherwise want to be dealing with. So right now I'm just waiting for a pyramid entry if it wants to give me it. I'd like to get a pyramid entry somewhere around here. There's a lot of boxes I know, but I'm looking at... I don't want the 15-second to be confusing to you, neither the 1 minute, but in here, 15-second, everything is a market maker model, right? So if I'm looking for a pyramid entry, especially on the 15-second chart, or if I'm looking for a regular entry on a 15-second chart, it's already probably giving me the 1 minute structure that I want. So I'm just waiting for a fractal market maker buying model to form, give me one of those PD rate entries, either in the form of a SysD, there goes the stop out, SysD, fair value gap entry, order block, whatever it may be, that I can utilize to then pyramid it. And preferably it would be in discount of the dealing range on the 15-second chart. This is pretty advanced stuff for probably most, so don't have to worry about it if you're new. But for those who are starting the 15-second to 1 minute entries, anytime you're getting a pyramid entry, you have these fractal implied dealing ranges, and you can use these as micro entries, right? So in here, you want to see the entry and then speed as we get past 75% of that fractal market maker model. All right, so in here got stopped. Screenshot this really quickly, put it into stream trades. No big deal. You can see how energetically it ran through the gap and the first presentation gap there. And drop risk. So 5 minutes still within this consolidation range. We're in macro time now. Yes, took the high. Oh yeah. Not too bad. So we'll wait to see if we can get anything else. I'm fine with taking one more on this if it allows me to. Otherwise, I'm sitting out for the rest of the day. I don't think this is a bad trade, right? You got run on stops internally, displacement up through a change in state delivery, market structure shifter here if you want to, gap, digging into the gap into macro time with the fair value up order block, and then targets on the buy side with the bullish bias. I think that's a pretty textbook entry. So the loss is a loss. Losses are, it's a very weird thing. I'm gonna release a psychological checklist, kind of a pre-flight checklist that I do personally. That brings a lot of peace and kind of just a mindset you to have coming to every session. And to me, it helps a lot. So you don't overreact to losses or anything like that. I'm gonna post that later today if someone reminds me, please. I got a pretty busy schedule today outside of trading and within trading. So if I forget, let me know. But losses are completely normal, right? I want to normalize it. I don't want you to be scared of them. Losses are kind of like the dark as a kid, right? You're not really scared about the loss as much as you are about your reaction to them or the things that may bring them, right? You're not scared of the loss most times. You're scared of the everything else that surrounds the loss that you have formulated in your mind to be an issue. As much as you desensitize yourself to those things, then it becomes less of an issue and it becomes less scary, because you know with confidence and belief that the things that you were once afraid of within that model or within the losing trades don't threaten you anymore, right? You saw last week or two, I don't know, was it 4 weeks ago or 3 weeks ago, whatever, took like 3 losses on in a row on the demo, right? It was like Wednesday, Thursday, Friday. Shouldn't have been trading Friday. We went through that. And then later that next week, very next week, one trade took out all those 3 losses and then pushed us up in profit further than where we were on the equity high. So if you 100% believe in your risk management and you 100% believe in your ability to take good trades, there's no thinking that needs to be done, right? There's no thinking about how long it's going to take to get back to your equity high. There's no thinking about risk tolerance and risk profile for what that is. There's no thinking about, oh, is this amount of risk good for today or should I increase it so I can get back to where that loss was? Anytime you start thinking about money is when you lose. You start building bad habits. So you want to, outside of the charts, develop a very refined, obviously, model. And especially for me, right? I don't really have a very specific and entry model. I have maybe 4 entry techniques that I like to get in, but my model personally is my overall intuition to identify high quality AM session trades. Where I believe that session is going to offer me a larger expansion, or I can take a trade in direction of that session move, and preferably in line with the daily and the weekly. That's my model. So when it doesn't work one time, it's very irrational to look at that one time and say, yeah, this is going to be a problem. I got to go in and I'm missing something, or I'm a bad trader, or whatever it is, because the fact that I've spent probably around 5,000 hours on this model and on my approach, right? I spent thousands of hours in the charts, looking at it, studying it, developing a approach that works for me. There's absolutely no reason you should doubt the technical side of it, right? You look at this trade, you look at it probably 9 times out of 10. If I'm bullish and I like that kind of setup, there's probably things, when the answer key drops at noon and at 1 p.m., I'll be able to go back into this with very clear mindset by myself, see what went wrong, right? There's always something that went wrong and I can identify that and fix it for the future. But when we look at it set up like this, to me, I think that's pretty good, right? Stop loss, I don't want to be too tight and put my stop loss there. I think a stop loss underneath this was perfectly fine. And, what more can you do about that? And then you got risk management. You trust your risk management enough. You really look at the numbers you only need a 33% or a 40% win rate, and a 2R is profitable. It's not sexy. It's not like comfortable for some people who want to be perfectionists, but a 40% win rate and a 2R is profitable. And the addiction sometimes to being right and that ego side of it is what's going to make it so that's a very hard statement to swallow. But as soon as you release that control of wanting to be 100% or wanting to win every time, and just trade, that's when it becomes the easiest, right? So you wake up every day and you just have a job to do, which is to trade. And that means you may get paid today not to take a trade. That may mean you get paid to take a loss. It may mean you get paid to take a win. In the long term, that's what it is. The short term, this game is very weird. It's like if you had signed up for a W-2 job, and then one week they paid you $4,000. The next week they took away $2,000. The week after that they paid you nothing, and then the week after that they paid you another $2,000. And they say at the end of every month or at the end of every year, you're going to have the same salary, but we're just going to mess with your paychecks. And sometimes we're going to give you your salary. Sometimes we're going to take, that's kind of what trading is in a sense, where sometimes they will allow you to get your normal paycheck or maybe slightly higher than your paycheck. Sometimes it's going to be flat. Sometimes it's going to be slightly red on the week or on the day. But in the long term, your model should be churning out entries and high quality entries and obviously wins. So, your ego may take a toll because you lost. And that's, I really believe that social media and the community part of it it's a double-edged sword. You can have very positive communities, and I think this community here is one of those ones where everyone's kind of willing to learn and willing to help out those who want to learn. But then you also have the double side of it where people who are less apt in their psychological parts of their trading are going to see others win, and mostly only win because no one really posts their losses, right? See other people take good trades, and that's going to become a pitfall for them. So I don't really think that you should be posting. I don't post all my trades. I take trades on my other accounts, my live accounts, my funded accounts that I don't post here. I'll post, on the mark reviews here and there, I'll post some screenshots just to show. And on the stream trades part of this Discord, I'll post the ones that I take on stream, some of the ones I take off off. But I don't share everything because to me, trading is a solo game. I don't owe it at all. And there's some part of that I think that needs to be protected in your brain. I'm still watching price action here. I'm not just yapping. To me, it looks a little bit too range bound for me. I told you I'd like to see what opening range does and if you can tag that buy side. But at this point, looking at the 5 minute, look at the 15 minute, we're stuck within this gap and just consolidating. So I'll give it another 6 minutes or so. Wait till the end of the macro time. If we're still kind of range bound in here, and by range bound, I mean I either wanted to displace and take out this swing low here, or I need to run back up in towards that breaker up here. And get that same kind of energetic run past this swing high, and then look for another long opportunity back up to the buy side if he gives it to me. But in here, I mean, ES looks a bit cleaner. Still a little funky. Euro USD is looking good. But to be honest, looking at the downside, we're trading back into an IRL on the 1 hour chart. The next EL value you have is the PM session low, 15-minute, all the way down here. Got a swing low in here and discount of the dealing range, I believe. So you could use that as a short-term target, but PM session low next. But I'm still keeping this bullish bias for now. I believe we had 9:45 news today, right? Yeah, YM is moving nicely. So unfortunate. You could look at this and say, oh, why don't you trade ES or YM because it's stronger assets? I'm not going to look over there. 10 a.m. home sales, I think. Let me see. I know. Unfortunate for NASDAQ. Forex Factory. We got 9:45 flash manufacturing PMI and then 10 a.m. new home sales. Yeah, chopped PA. So home sales came out. Orange folder. All the news drivers are out. I know, right? I mean, yeah, based on what we're seeing here, I can see that's reasonable. I mean, really didn't get any displacement out of it. Looking to see if we can get another entry. Yeah, same. I don't want to be trading silver bullet in here either. So it's either going to give me an entry off of this pump up to the swing high, or I'm going to be done for the day. Yeah. Nasty. You see the 5-minute order flow is still holding this 1-hour gap decently well with the candle bodies, but the amount of times we've been digging into this, we like the 15-minute, like the 5-minute. Seek and destroy-esque, to be honest. Yeah, nope. All right. So that'll do it for me today. We'll do a mock review later if time permits, and if there's anything that actually comes to fruition in this session. Yeah, not really liking it too much, and I don't want to be trading it further into silver bullet as we move further and further into time of day. You know that with 8:30 news, I like to trade 9:30 through kind of the opening range. There's anything after that, I'm not too inclined to really take anything. So one little loss on the day, nothing big. Still profitable, obviously, on the demo account. Trying to think if I want to reset it or not. Go back to 0 to 50K and trade a different model this time, or if we want to push it up to 100K or something. But either way, yeah, you saw the loss. You saw the kind of recap of it. Bias, I think, is pretty reasonable. And then, yeah, we're just stuck kind of within this 1-hour gap. I still do believe that the buy side is likely to go for. I mean, I love it for it to be end of today, but I know with that consolidation reversal profile we're talking about, it's all over the place, and I am finding it harder to read a clear bias. So, anyways, Yeah, so be safe today. I'm gonna see if we can get this high up here, and like I said, we'll do a mark review if time permits. And then, got any questions? Send me a DM as usual. Appreciate you for sticking around. Short stream today. We'll do a stream tomorrow. We will do a stream tomorrow, despite the price action. If it's bad, good, whatever, we'll do a stream just like today. And hopefully you can learn something from it. And yeah, so journal if you didn't already. Review the journal as well. It really helps to read them out loud. Once you write them down, just read it out loud to yourself, see what's going on, and then yeah. All right, so yeah, take care, and I'll talk to you guys later. Peace.